What is up, guys? Let's go over how to use specifically the Schwab Research Center to find and select stocks. Now, this process is going to be the same for any brokerage. If you use Schwab, if you use um, E-Trade, or even if you use Yahoo Finance, and I can go over how to use Yahoo Finance as well today, but I use Schwab mostly. And I really got used to them, and I really like pretty much everything about the research center. So let's just kind of take a look here. Um, the first thing I do is, first you have to have an account actually to get to all their research stuff. So then you log in and you go to the research tab, and I basically only concern myself with two of these. The two of these tabs here, the screeners and the Schwab stock list. So I already opened these. This is a Schwab stock list. Now, I don't actually care about the stocks they put in here particularly. Like, I don't care that a stock is in here because it's on their Schwab list. Like, that's not really a concern of mine that Schwab has recommended the stock list. I don't go off of other people's recommendations. The real reason I look at this is just to get an idea of more stocks to look at, because sometimes it's just hard to kind of like, if you use a screener, you kind of narrow down so many stocks and whatnot, and then this gets like hard to just find other stocks. So I kind of just use this to keep my eye open on other random stocks. This is kind of like a little bit of my randomizing, like I'll kind of look at like maybe 10 or 15 of these and see if they fit into most of the things I would screen for, but maybe they just didn't make the cut for some reason. So some of these might be really good to invest in, and I've made, that's actually how I've just discovered some of like really good investments that my screeners sometimes don't catch. So this is just something I just kind of gander over, right? It's not really the meat of what I do though. All right, so let's go to the screeners tab, which is, in the research screeners, and I open that here. Let's go. So here is where you can really decide what kind of stocks you're going to invest in. Stocks that are making more profit, stocks that are undervalued. It depends on your style, right? But I'm going to build the criteria that I would probably look into. Okay, so I would look into the universe here. Let's keep it domestic. I don't want to jump into the international stocks. Market cap, let's keep it, actually, all of them are fine for me. Usually large don't move as fast, right, as a little mid, small, and micro. But usually micro is a little too volatile. But, I've invested in all of them, and all of them have made me a lot of money. So really, any of them are okay. You do select all. I don't know why it's filtering there. Sectors. Well, because I am aware of what's going on in the industries, I would want to exclude energy because energy is doing terrible, and I can't predict a bounce back. It probably will bounce back, but I can't predict. So I'd probably exclude energy. I don't want to. I don't, yeah, I'll just do everything except energy. I don't want an energy stock. Um, you have 9 sectors selected. Cool, and not energy. Good. Now same subject. Yeah, I'll skip this. Exchange. Any of the exchanges are fine. So let me close these two. Let me get rid of these two. Price. I don't buy stocks that are under 20 bucks usually. That's where I put my cut. I got rid of a lot. Well, that's good. You don't want to look at 9,000 stocks, right? You don't want to look at 5,000. You don't want to even look at 2,000, right? So let's go. Percentage held by institutions. This is actually semi-important for me. Less than 10% usually shows that it has no support at all. I think actually you want minimum 20, but I've invested in some where the minimum is 15. Actually, let me put greater than or equal to 14%. Yeah, that should be good. You just don't want a stock that is, not institutional support is when a stock shoots up a ridiculous amount in price. That's because it's gaining a lot of institutional support, billions of dollars, or depends on the cap of the company, but lots of money So when institutional sponsorship happens, sorry, I think there may have been a cutoff there, but let's just keep going. When institutional sponsorship happens, that's when you see large spikes in price, and that's how a stock goes, from $28 to $35 and then to like $40, and or Nvidia, how it goes from 121 to $140. It's not because me and you or small people are buying it, it's because institutional sponsorship. So this is actually very important. You definitely want a growth in institutional sponsorship. The percentage, actually, current percentage doesn't matter as long as it's kind of above like a minimum, like a 15 or 14, right? What matters is that more institutions are purchasing their stocks, or the shares of a certain stock. So this is super important, but um, as long as it's just kind of above this minimum, I would think. Volume, as long as it's just kind of not something you're gonna get so easily manipulated. So I'd say just above 100K, but I'll just put 50K. 100K. If it's less than 50K, you might get screwed really badly playing that stock. It might be way too volatile. Earnings, no. Splits, no. Dividends, I don't really care about dividends, although it's great to have dividends, but I don't care about analyst ratings. Company performance, here we go. Last 5 years, last 3 years, shooting for growing stocks that are doing better every year. Let's shoot for some growth here. Now we're down to 145. So the last three selections I just made was I want to see growth in the last 5 years, last 3 years, and in the last recent quarter of at least 15% over where it was in the last year or whatever quarter, depending on which one I'm selecting here. So this is just I'm looking for stocks that are just growing, right? That are doing better than they ever were and have continued to do better. And so I don't care about estimated growth though, because that could be wrong. EPS growth, here we go. I like this to also be in the top tiers here. And I'm really tearing down my selection, and that's good. You don't want to invest in 100 stocks. You want to invest in the best stocks, right? You want to invest your money in only the top stocks. Here we go. Next, I don't care about this. Price performance. There's something to be said here about price performance now. When I put my filters on, usually for price performance, it doesn't really pan out for me. I usually end up not finding the correct stocks. But a stock that is performing better in its sector than than the other stocks is a huge factor in selecting the stock. I would not select a stock if it had all these criteria and its price performance versus other stocks in its sector was not at least the top, doing the top 10%, I'd say, or top 15%, right? So if like I'm selecting Amazon, and Amazon is in the consumer discretionary sector, and Amazon is doing is last in place, as in like other stocks have gone up 10% in the last month in that sector, while Amazon's gone up 1%, I would not purchase Amazon. But actually Amazon is doing great. So let's see here. But I don't really like the filter for it. It doesn't seem to work for me here. But I do check it. And I'll show you how I check it by sector after we finish this screener. Valuation. Honestly, don't care about I think any of these. Yeah, I don't think I care about any of these. People really harp on price to earnings, but if you look at the correlation between price to earnings and the potential growth of a stock price, you'll see you will miss out on a ton of money if you think that price to earnings actually matters. I'm sorry if that's too blunt, but from literally looking at I don't know, thousands of stocks and what their price to earnings was at, and then how much higher they did go to. I find that this doesn't help actually. This valuation just doesn't help me. So That's probably because I'm a growth investor, though. It's maybe okay, for valuation investors probably matters, right? But this is my style, so here we go, and it works for me. So financial strength, nope, I don't care about that. You would think I care about this because I'm looking at companies that grow, but actually the growth I'm looking for is basically revenue and EPS, because EPS is basically the number one factor, I think, in whether a stock will grow in the future, is if it will continue to have better and better EPS. Maybe in the short term, or maybe in the next 6 months, it won't grow, but in the long term, a stock with growing EPS is absolutely going to go up in stock price. It's like a fact, right? Technicals, I don't think I care for any of these. No, I don't think I care about these. Yeah, so it's mostly just this. I think there may be something I'm missing here. Uh, oh yes, I do care about one of these. Here we go. I care about um care about yes. Okay, it's not here. I care about return on equity, actually. Most stocks that are doing great also correlate with having a high return on equity. I don't know where that is right now. I guess I missed it, but normally return on equity, I look for over 10% at least, and then I'll view those matches. And actually, with 33 matches here, that's a little bit too many. So I have the option of bringing that down, or what's it called, adding more criteria or whatnot. And see, I actually missed out on some of the stocks I really find are great picks. Although I have still found some really good ones. Here's IPGP. This is a great pick for me. This has gone from $100 when I jumped in to, and it's at 140. So that's a solid one. It's a 40% gain, right? That's insane in like 3 months. Facebook, a very solid pick when I found it at a few months back as well, 130, and now it's at like 152. Not as big of a grower, but money is money. You're making money. DHI, this is a classic example of it following a lot of the criteria, but not having that relative that strength in the industry of price performance, stock price performance relative to the other stocks. So this one, if you see it, I'll jump in it in a second. You'll see it doesn't have a good relative price performance, and I'll go into that more in a second. ANET, this is a huge winner. This stock went up, I think 40% in like 3 weeks. I bought it at like 95, 90, no, $93, and I held it all the way, and it's at 147 now. So that's like, okay, it didn't go up all that in 3 weeks, but now it has in 3 months. It's up like 60%. Amazon, great buy. ALGN, I believe this actually was a really great buy as well, but not right now maybe. There was a point where it hit a buy point and I missed it, but it was a great buy at some point, I believe. But anyway, let me now go and talk about that relative price strength I was mentioning. Here we go. Let's go jump in. We'll see it. So this has a pattern that I do somewhat like. It's a little too shaky down here, a little too kind of like wide and slow moving. All right, this is a year graph, but it's kind of what I like. If I did buy it at one point, it was at this new high here. I was like, okay, I like it. I like that it's at a new high, so I went with it, and it didn't really do too much, so I cut it at like a 3% loss. It still hasn't gone anywhere, so really, that was a good decision to get rid of it now. But down here we can see DHI, New York Stock Exchange. In the last 6 months, it's actually done, okay. It's done plus 14%, but compared to the whole industry in the last year, it's gone up plus 8%, whereas the consumer discretionary industry has gone up 16%. Now, that doesn't sound too bad, but once you look further into the sector, you'll see how it is just underperforming compared to other stocks. So we'll go in here, we'll look at what stocks are doing best here. See, IBP, this was a stock that I purchased at $33, okay, and it's gone up in the last year 48%, which is not great compared to some of the other huge winners, but for this industry, it's you know, you can tell, look, it's at the top of this list almost, you know, it's up here. Now, DHI, where is it in its relative strength here? Here, it's at the nearly the bottom, and there's 4, 5, 6 extra stocks on the second page. So it is basically, you know, almost last place here. And what the number I'm looking for is in the last 12 months how it's done, right? IBP, which was here, did 48.3%, and so you can, I would bet more money on IBP right now, given all the same factors, or I would bet more money on STHI or BZ, or no, not STHI, sorry, or this. I would bet more money on TMHC if it fell into the same bracket of having good earnings and whatnot and growth than I would on DHI, even though clearly TMHC will be probably much closer or at newer highs. So yeah, we'll see. See here, it had a buy point technically here, but I don't know if it really falls into all the categories and all the falls through the screeners as I would like. But my point here is that because it has done relatively better, you know, it's a better stock pick, and this is extremely important to me. So I basically, here we go. That's basically everything I look at. You know, whether or not it you believe in it or whatnot, or it's going to work for you, is at your own discretion, and you know, can't be responsible here. Blah blah blah, legal talk. But yeah, that's just what I do, and it works for me. If you want to try it out, give it a shot. If you want more insight, let me know. I can make more videos to go in depth. But other than that, that's basically everything I got, and peace out.